Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial conditions.
Hi, everyone. Jason with Blue Line Futures. Thursday, May 14th. All sorts of market action. Tuesday, we had the USDA supply demand report really spike the wheat markets. Today, different story. We're going down now. Big headline out in the overnight hours. President Trump over in China talking to President Xi. Just not enough news coming out of it. The market had built some premium ahead of time. That just got absolutely zapped out of the market today. Treasury Secretary Besson says beans are all taken care of when he was asked by reporters kind of what's going on over there. We're not getting any headlines, and just no news was seen as kind of bad news in this case. There was some hopes that corn would be talked about, just more purchases in general. So the past 3 years, or the next 3 years of having the 25 million metric ton soybean purchase expectation still there, but it just kind of looks to the market, to traders, like there's nothing new that might come out of this. So if we don't get any more headlines, it might be beans needed this to keep the rally going. We're looking at July beans right now. Had worked their way above 12.30 the past few days, quickly down to 11.90. We were down to 11.80 for a low today, down 45 cents at one point, closed 35 cents lower. So you're quickly back into that range where we saw 11.70 as the low, $12 as the high. Is there room to go down to 11.70? Yeah, short term, let's not rule that out. When you have a 45-cent move lower, you're going to get some nibbling by buyers, I think, in a market that still has a lot going for it. But let's hope we don't just get stuck in this sideways pattern again now that we're past another meeting, potentially no new news coming out of that. So I'm looking at especially 11.70 for a pretty good buying opportunity. But it might be shorter term than that. You see the purple and red lines on my chart there. Anytime we've been in that area, it hasn't wanted to go a whole lot lower than that, and that's right at about 11.90 for the July contract. Looking at July Chicago wheat, so big rip to the top side, sparked by the USDA report. They just slashed production. It had to be coming, especially for the Kansas City market. We'll get to that next. But worked its way over 680. Now it's got room to come back down 20 cents today. We might end up, 620 area, 630 area before you get support again. So if you're looking to be involved in wheat on the long side in Chicago, that'd be the spot. If we get back to, you're looking at maybe another 20, 30 cents lower if it gets there. That's what you want to be doing. I talked a few days ago about if you want to get downside coverage in place, buying put options below where the market is, not a bad opportunity when you get prices ripping like this. We just see wheat swing so much. So call if you have any interest. Kansas City wheat, similar setup here. We left some gaps on the way up. That's going to be the easy target around 690. We're 705 in July, Kansas City right now. So a little bit more to go. I still like, taking a shot on the long side in Kansas City wheat, just because that I don't think we know the full extent of the drought and the production uncertainty over there. Looking at December corn, that was off about 12 cents today. So the moves above $5, we felt producers, yes, it makes a lot of sense to get some coverage in place. We still like the setup over the next few months. I don't think the party's over. Pullback in the recent history tells us 490, 485 might be a pretty good buying opportunity in between the 20 and 50-day moving averages is right there. You got a pretty good low-risk setup. You know where you're wrong if prices go under that. If you're looking to get long corn, use this pullback because they have not wanted to last very long. And I don't think corn necessarily needed the China-U.S. story to do what it had been doing with this strength. Over to live cattle in June. Big surge yesterday. Cash markets just exploding. We get up to 255 this morning and again sell off a little bit. Live cattle market not off too much today, just small losses, but we're not liking that cash market's just exploding and futures market can't keep up. So 255, I don't mind some hedging being accomplished there. Yes, you face the risk that we do keep going higher with the cash market, but it feels like you might have to get something done rally kind of taking a pause right now if we're not breaking the fresh highs above 255. Over to the feeder cattle, a little bit of a different look, more of a downtrend going in place. Big rally yesterday. The line in the sand is right around that 356 area in the August feeder contract. So if we can't, sustain a rally like yesterday, we tried to this morning, pretty good jump. Right, high was set right on the open, and then that's being sold. So with what cash markets are doing, there's a little cautionary tale in the cattle markets unfolding right now, that we're not able to maintain a rally for really just 5 minutes like we saw this morning. And looking at July hogs here, nice rally from 103 to 106 yesterday. Hopefully today was just a little bit of a pullback, down a little over $1. We'd love to see them get up to 106, 107. We've been talking about how that'd be a great spot if you're a producer and need to get some hedging accomplished. Let's hope it can get there, because rallies haven't lasted long now in the hog market. But every time we're down below 102, 101 in July hogs, it's not wanting to last very long. There's a good base of support there. I think you get eventually the move up to 107 or better. Just make sure you're ready to go. Call in if you have any questions on this stuff. Again, we're looking at the Blue Line Edge trading platform. Great tool to use to track markets, chart, make sure you got things, good levels for entry and exit. And always remember, futures options trading involves risk of loss and may not be suitable for all investors. I hope you have a great day. We'll be back soon. Thanks.